All right, welcome to Coffee with Marcus and Mark. In this show, we are going to talk to you about what's happening in the markets and how we are trading these crazy markets. Today is Tuesday, September 20th, and there's a lot going on. You see, yesterday, stocks closed slightly higher, but today we have a wait and see approach, and stocks are struggling to find a direction because tomorrow is the all important Fed meeting wrapping up. And this is where we'll hear more about interest rates. We'll talk about it this morning. The 10-year yield is at the highest level since 2011. Yesterday, we heard more bad news from Ford. They warned investors, and we'll talk about this because Ford massively down this morning. And we'll show you our current position and how we are trading the market. So as you can see, there's a lot to talk about, so let's get started. But very quickly before we do, hi, I'm Markus Heitkoetter. That super smart guy over there is my head coach, Markus. And we are real traders who trade live accounts. And therefore, we got a lot of trading experience. And we're showing you here exactly how we trade these crazy markets. So we know our stuff, and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. Now, talk about crazy markets here. I mean, yesterday we did actually close higher. I was a little bit surprised by that.
You know, Marcus, I would say the same. Going into the Fed statement, we know that it's the biggest event of the week, and so when you go into something like that, you can see some nervous markets. Sometimes there's some back and forth indecision. You mentioned some diddling around, right? But we drifted higher, and we ended up the day positive, which was interesting.
Yeah, but then today, I mean, if you look at a 5 minute chart, we see that basically most of the day yesterday we were diddling around and then just moving higher in the last hour of trading. This morning, markets are nervous, first going a little bit lower, right now pushing a little bit higher, but still down more than 1% from yesterday's close. And I mean, that's not surprising at all. Because tomorrow, let me just bring up the economic calendar here. Tomorrow is the really big one. This is where we have the FOMC statement, where they actually the Fed funds rate, where they will tell us, do they raise 3/4 of a point or 1 point, and then the FOMC statement.
Yes, big day. So 2 p.m. Eastern, we have the statement, and then 2:30 we have the press conference. So you usually see a little reaction to the statement because now uncertainty on the hike itself is out of the way, even though most people expect it to come in at a certain level. We'll talk about that. Then you have the comments from the Fed, what their plans are, what they feel about current market conditions. That's where you tend to see a little more volatility these days at 2:30 Eastern.
Yeah. So, I mean, right now the markets are expecting a 3/4% rate hike. So that's already factored in. There's a little bit of a possibility of 1%. And I know that yesterday when we talked about this on our YouTube video, that's where we had Catamaran Channel saying they will do 1%, and I'm 100% sure. And you said, I'll bet you some ribeyes.
You know, I had to take a bet. When someone says something that is 100% certain, I might just bet you. So having a little fun. Hey, Catamaran Channel, if you're watching this, I'm not sure if you're a Power X owner or not, but definitely let us know. Curious. I decided to take that bet. We talked about ribeyes. We talked about $100, and then we settled at $50 in crypto. Gentleman's bet. Not trying to take some money from you, but I would say that I still stand by the 75 basis point, and I'd be happy to send you $50 in crypto if it's 100.
Yeah, and I mean, for those of you watching, if you want to take us up on the bet, we're convinced it will be 75 basis points. That is our lucky guess. And if you want to bet against it and say, no, I think it will be 1%, or even if you say it will be 0.5%, they will follow Elon Musk's advice and actually go to 0.5%. Let us know in the comments. We are happily taking the other side of the bet. And usually we like to bet some steaks. For Mark, it's ribeyes. For me, it's filet mignons. But if you want to bet anything else, please feel free, leave a comment. As you can see, we're responding to all of the comments because we are reading them, and we'll let you know you're on. Okay. So this morning also we had the building permits and the housing starts coming out, and this was an interesting picture here.
Yeah, so I mean, again, not going to be a big market mover or something that traders really focus on. But we see that building permits came out a little bit lower than expected. Housing starts, though, a little bit better. So that is a similar theme that we saw last week where it's a mixed bag, right? We're seeing conflicting information on whether or not it's good or bad.
Yeah, but I think here, when in doubt, we should go with the building permits that are going lower. And I mean, we saw that yesterday mortgage rates were topping 6.3% for a 30-year mortgage. I mean, twice as much as they have been. So this will definitely slow down the housing market. I mean, there's no doubt about that.
Yeah, yeah, for sure.
Talking about rates, I mean, yesterday we briefly talked about it that the 10-year yield is at the highest level in 11 years. And this morning, it's even marching higher. So on a daily chart, we just see today up another 2.84%, now almost scratching 3.6% here. And that's the highest in 11 years. We haven't had a rate that high since 2011.
Yeah, that's a big move taking off, and that could be putting a little pressure on the markets. Just as we approach the Fed, you would think that a lot of that would already be priced into the market, but I guess not. I guess not. So, big move on the 10-year yield.
Yeah. So if you're looking at the markets this morning, it's quite interesting. If you're looking at a 5 minute chart, surprisingly, the Nasdaq right now, the strongest index, down only 0.6%. S&P 500 and Dow down almost 1%. But again, today is diddling around, and I think the same will happen tomorrow morning, and then tomorrow afternoon. Grab your popcorn. I mean, the whole financial world will be watching at 2 p.m. Eastern time. They will watch a fireworks show. I'll be watching the fireworks show because stocks will definitely react to what is happening tomorrow. Which way?
Absolutely,
We don't know yet. This is why we always say trade what you see, not what you think.
for sure.
Yeah. All right, let's take a look at what we did this morning and the positions that were popping up. Because with the markets being slightly down and volatility high, we had a lot of symbols on the scanner. But first of all, let's talk about this. I mean, LVS making another move again today, up right now, 4.77%. Yesterday, LVS already popped higher. We both have a position in LVS, and last week we already sold the 42 calls, which is above our break even, but below our cost basis because our cost basis is somewhere up here. For me, it's 46.86. For you, it's somewhere around there. I mean, plus minus a few cents. But last week it worked out great. And this morning, when we were just moving higher, we said, let's do this again. So here we sold the 40. Which one did we do, Mark?
43.
The 43, right. We sold the 43 calls for 25 cents, and this gives us 54% annualized. And the 4,700, I have 3,600 stocks. So this year was a nice $900 for me for just a few days.
Yeah, I mean, just watching this thing move. I mentioned yesterday that this is ready to break, and it did. Taking advantage of that surge and that volatility. I mean, this is where ideally we'd like to sell calls at our cost basis, and that is our go-to 99% of the time, I'd say. But in this case, we've been in the trade for a while. Like you've shared there, the break even is considerably lower than the cost basis. So we've managed to collect some premium. I'm not really looking to give up all that premium, but I'm happy to take advantage of these big jumps because that's when you see the volatility in the options explode and get higher, where we could take advantage of that. Not selling below our break even, but above, somewhere between our break even and cost basis makes sense. So we could take advantage of that and potentially move on from this one.
Yeah, because it seems that we are breaking out here right now. And so this is why we can do this. So, I mean, let's talk about this. If LVS moves towards 43, or if it closes above 43, we have several possibilities. Since this is a short-term trade here for just a few days, we could actually roll these calls, right? And if LVS pulls back, we might even be able to buy back these calls. Or like last week, they expired worthless. So
Yeah.
even though we sold the 43, does not mean that we are ready to give up on this one and getting called away at 43. So going up all the way to 43, let's go back to the calculator. This means that right now, what is the current price of LVS?
It
There it
is
is. That's
40.70.
40.70, right? So this means that it would have to make from here another 6% move. And today it's already up 5%. Can it happen?
Sure.
Absolutely. Of course it can happen. But this is where, again, as time value is getting sucked out of this, it will help us. And right now, last I checked, these calls that we sold were already trading down to 17 cents, 16 cents, something like this. So, I mean, even within an hour, the premium is already getting sucked out of this one.
Yeah. And Marcus, like you said, our goal isn't to get called away at 43. But worst case scenario, it's always good to go in knowing what your worst case scenario is. And if for some strange reason we weren't able to do anything, we get called away at 43, we're making some money on the overall trade and we're freeing up buying power that has really been locked up for a considerable amount of time. Now, a better scenario is if it pulls back a little bit, we're able to get 90% of the max profit on those calls or let it expire worthless. And then next week, we get a nice rally and we could sell calls again. Or we could roll if the stock moves above our strike and potentially start to close the gap between uh, our actual cost basis. So that's what I really want to do. I'm not trying to give up $3.86 of premium that I've already collected, but I believe that there's a lot of management potential, and we were able to take advantage of a nice move today.
Yeah. And so our break even with every call that we sell goes down. So last week we sold it. I haven't adjusted the break even. How much did we get last week? Was that 15
10
cents or
cents.
20 cents?
No, it was 10 cents. It was a 1 day trade. It was
10
it
cents,
was
right?
10 cents.
So with that, and then also with this trade, so this means that my break even gets lowered by another 35 cents combined. Again,
Yeah.
doesn't sound like a whole lot, but as we are around here, this is where it becomes fun to sell calls between the break even and the cost basis, and hopefully eventually being able to sell calls at 47 and then getting called away.
Yep.
All right. So today we had a lot of possible maybes. I want to run through a few of these. Usually we run through our positions, but I thought we have done this over and over, so we'll do it again tomorrow. But let me ask you, since you're watching this here, as we discuss this LVS trade, is this helpful at all? And do you want us to run through a few possible candidates for today? If so, give us a quick like. And because we see here the like counter going up. So hit the like button, and if you get plenty of likes, then we can run through a few of the maybes and why we consider them as maybes. And then we did take a trade, and we are
Yeah.
revealing that trade tomorrow, and here's why. This way you come back and keep watching. All right, so quite a few that popped up. AXP, American Express, and first of all, when we are trading the wheel strategy, number one, we want to sell puts, and we only want to do it with companies that we are comfortable owning and having in our portfolio. So, what do you think about American Express?
You know, I personally think American Express is a solid company, and not only is that my opinion, but if we are to check out the fundamentals there, you'll see that they do pay a dividend yield. It's small, but they pay back their shareholders. PE ratio is great, below 20 there. Quarterly net profits have been steady for the last 5 quarters. If we look at annual profits, a little bit of a pullback in 2020, but positive and strong for the last 5 years. So as far as owning AXP goes, I'd be happy to own it.
Right. And then the second question is, are you okay owning it at 146?
And this is where it's decent because you see that it's below those short-term lows, which could have short-term support. But it looks like there was a lot of trading around, 136 to 140. So I'd personally rather be at a lower strike here.
Yeah. All right, but a few others. Caterpillar, I mean, super solid company, one of the Dow components of the Dow 30. And here we have a strike price of 170, which is exactly at the lows that we made recently. This is why we have here the lowest closing line. So this would be another possible trade. And again, you can check the fundamentals. We don't do it for everyone. We just want to show you a few possible trades that you might want to consider. EA is another one. We talked about this yesterday also with our mastermind. So Electronic Arts, as you can see, has been trading in a range between what mainly 120 to 150. Right now, trading at the lower range, so that is another possibility. We also looked at Edwards Life Sciences as a possibility, and I think we already talked about Halliburton versus Suncor. Suncor, it's a position that we are in, that we are owning. We traded yesterday. And I think that that CLAC is another good candidate if you are into semiconductor equipment and materials. What do you think about this one here?
Yeah, I like this one too. It's just you want to check your correlations, right? There was a question yesterday if I thought LVS was about to break out, why wouldn't I buy more shares or buy shares? And I don't want to be over leveraged or over positioned in one name. And so not only would that apply to the same stock, I don't want to take a double position in a stock because I could be wrong. But also, I don't want to trade correlated positions where they're moving almost identical to one another. And so CLAC would move similar to AMD. So I wouldn't trade it for those reasons. Here you have, do you have CLAC in there?
Yes,
Okay,
I
yeah.
just put
CLAC
CLAC in there, and we see that it is highly correlated to NVIDIA. It's very correlated to
to
Google, and
Google too.
therefore that would not be a good candidate. But if you go back to this maybe list, and we are looking at, for example, American Express. So let's go to American Express, and let's see if we bring this into the mix. Then we see that the correlation is much lower here. So typically, I like to see a correlation of 0.65 or less.
Yeah,
So
I'd
that's what we
even
like to see
and
here.
for me, it's trying to keep things below that when you have multiple positions. But
Yeah. A
agreed.
super interesting one, we talked about this yesterday, was EA. So Electronic Arts, right? I mean, gaming, you would think that they are somewhat correlated to NVIDIA and AMD. And when we looked at it yesterday with our mastermind, we saw that EA is actually not correlated to anything that we have. I
Yeah,
mean, super low correlation to NVIDIA, which I found was super surprising. Super low correlation to Google here. I mean, as you can see, this is all green. So if you have multiple opportunities, make sure that you check your correlations. This is why we built this asset correlation into the tool here, and then trade stocks that are not too correlated, because otherwise you would put all of your eggs in one basket.
yeah, this is why trading tools are so important because you don't have access to the millions of data points that the software does, and sometimes what you think might not actually be true.
Yeah. Nucor was another one, looking very interesting. Basic material steel. So again, another industry. And looking at this, we see that also NUE, Nucor, has a super low correlation. So if you have a similar portfolio than me, instead of putting CLAC in there, it would make sense to consider rather EA and NUE.
Sure.
Okay. Now, full disclosure, this is not what we traded today. So we did take a trade today that we'll show you tomorrow what it is. So make sure that you're tuning in tomorrow. And if you would like to learn more about the wheel strategy and how we trade this, take a look at these videos right here. This is where we explain everything in more detail. So check this out, and then we'll be back tomorrow morning showing you what trades we took today.
Happy trading, everybody.